I'm excited to be here to talk about this topic, which is very near and dear to our hearts: automation. Billing and taxes certainly go hand in hand, and I'm excited to share the floor with Michelle over here. A little bit about me: founder and CEO of Ordway. I have spent 20 plus years in taking some extremely popular products in finance to market. I was an early employee at Zora, Intact, Workday, and also at Spree-Commerce, which got acquired by First Data. And we have used all the 20 years of experience in building enterprise software and applied it to Ordway over here. We are backed by CRV, Founder Collective, Letter Hippo, some of the well-known investors out there. Billing is definitely core to what we do, but billing is a very broad subject depending upon whom you ask. Our goal over here is to automate billing and revenue by building this bridge between sales and finance, such that we can handle all aspects of post-sale when a contract is closed, invoicing, how much to invoice, when to invoice, payment collections, recognizing revenue. A lot of the world does revenue recognition in spreadsheets. Ordway's mission is to eliminate that, as well as KPIs and analytics that you need for your typical SaaS business, your SaaS metrics, expansions, contractions, etc., and so forth, as well as feeding all the way to GL. And we will get into a little bit more depth about the world of automation when it comes to billing. And so automation by nature is reducing time, right? It's important for us to understand where does most of the time go. At Ordway, most of our primary contacts are in the finance organization, in high growth SaaS companies, cloud companies, etc. We consistently hear from controllers, CFOs, finance VPs, where are they spending the time, right? We hear from them that they want to minimize the time on day-to-day operational activities like paying bills, chasing collections, filing tax returns. Thank you, Anrock. These functions may sound like chores, but are extremely critical to the success of any business, right? But we want finance organizations to focus on more strategic functions. We want them to be looking forward. We want them to be looking at strategic planning, analytics, right? Budgeting and forecasting. And this is where automation can really help simplify and streamline what you may call as chores, like generating invoices, calculating how much taxes to show on each of those invoices, et cetera, and so forth. Now, let's pause here. And if you really stop to think about this, there is really no more important function in a company than billing. Fundamentally, billing is the mechanism by which one converts a signed sales order or a SaaS contract into cash for funding your day-to-day operations. But most companies, you will never hear the word strategic and billing in the same sentence, right? It's just perception, right? Billing is actually one of the bigger challenges that finance organizations wrestle with at fast-growing companies. And the three elements of this strategic nature of billing that I want to highlight are cash flow, investor reporting, and customer experience, right? At companies where if there is even a slight complexity in the contract structure, lots of mid-contract changes or innovative pricing models we see even in fintech companies with usage-based pricing, the process to generate these invoices can take weeks. We have seen companies come to us prior to Ordway. They were taking 2, 3, sometimes 4 weeks to get the monthly invoicing completed. Not only is billing consuming a lot of time that would be otherwise spent on strategic initiatives, but delayed billing is holding up cash flow. Now, if you have a net 30 term on the invoice and you took 15 days to generate the invoice, effectively it has become net 45, right? The next aspect of this strategic nature is reporting. If you don't generate invoices on time, it doesn't feed into your investor reporting on time. The reporting can be delayed because the accounting staff are working on generating customer invoices. You don't want to be in this position of having to delay reports to the board, to the investor community, etc. Delayed reporting, as you can imagine, will lower confidence with the investor community. And at the end of the day, billing will play a huge role in customer experience as well. Nothing ends a honeymoon period after a new customer acquisition than sending an invoice with incorrect charges. Billing errors introduce unnecessary friction into a relationship. It often creates a setback for customer success and sales teams in their efforts for upsells to grow the account, right? We see this a lot. A lot of customers wrestling with complex calculations required for, let's say, usage-based billing, mid-period changes, upsells, cross-sells, renewals, changes in pricing and packaging, and so forth. The more complex the calculation, the more likely an error is likely to appear on an invoice and so forth. And talk about what is billing automation. It's a very broad domain, but today we have tried to simplify into these four silos. There are a few examples of why, these are just a few examples of why billing is important and getting it right is critical. The best way to get it right is to try to leverage automation, right? And technology obviously can help. It can help speed up the process so you can get the invoices out of the door with a click of a button rather than weeks. Perform complex calculations to increase the accuracy of these calculations. Um, the four pillars that I'm going to talk about today are sales contracts, billing calculations, payment collections, accounting and reporting, and so forth, right? And the next few slides cover each of these sections a little bit more in detail. We're going to talk about sales contracts over here. To generate invoices, we need to gather all the details needed for these calculations, right? And where does this calculation come from? These calculations come from your CRM systems. They to accurately calculate an invoice, you need to know what products are being sold. You need to know what prices are there for each of the products, as well as any discounts offered. You need to understand payment terms, whether you want to pay in advance, you want to pay as you go, net 15, net 30, net 45, etc. And of course, taxes. You need to know the location, you need to know city, state, zip, etc. for tax calculations, and contract length, whether it's a 12-month contract, a 24-month contract, or a 5-year contract, etc. All this information typically does sit in a CRM or CPQ application. Alternatively, they also this information can come from an e-commerce application or your own product, product where people can come to your website, sign up, and choose what services or products they want to purchase and change over time and so forth. So basically, the simple underlying principle to automating billing is to make sure that we have a direct integration with the system that hosts all of this billing information. Some CRMs offer more options than others. For example, Salesforce has been around for 20 plus years, offers a lot more configurations, but more and more we are seeing HubSpot catch up and offer a lot of these functionalities as well. It's also important to make sure that you automate not just new contracts with new logos, but also the upgrades, the mid-period changes we discussed, downgrades, renewals, and cancellations from existing as well. You definitely want your customer success teams performing upsells, cross-sells to your install base. If each contract change creates hours of billing and accounting work, you're going to need a small army of minions to keep up, basically. So let's go to the next piece, which is billing calculations. We won't really talk about the math of the billing, but we will certainly talk about what feeds into that math here, right? And these are some of the examples that you're seeing on your screen, starting with discounts. Discounts can make the calculations really complex. Sales and marketing teams are going to get creative with their strategies used for new customer acquisitions. You will see discounts, for example, 30% off the first year and then converting to full prices in year 2 and year 3. Sometimes we will see free months for the first 3 months, making it a 15-month contract, basically. A credit, $100 off credit of monthly subscriptions for the first 3 months, for example. Implementation fee is waived 50% off, or ramp up pricing in declining discounts, 60% discounts of first year, 40% second year, 20%, etc. You see where I'm going with this? There are a lot of different combinations that one can use for discounts as one aspect of what makes these calculations complicated, to say the least. Next is usage rating. We see a lot more companies combine flat monthly subscription fees with variable pricing. If in these instances, you will need to gather consumption data and process it through a rating engine and arrive at the amounts. We see a lot of companies do this in Excel manually, and it can really take a lot of hours to compute all of the math that goes behind what to display on the invoice, right? And then credits, refunds. Are there any credits to be issued for SLA violations? Is this the first month or the last month of the contract? Is there a proration that is going to happen because you made a mid-period changes? If you sell in multiple countries, there's going to be an FX impact on it. The currency movements may go up or down, and that may actually impact your FX, and you have to book a gain loss for the FX and so forth. A lot of people who are not in finance will think that these calculations are straightforward for SaaS applications. Take the monthly price, multiply by 12, add the taxes, and bam, you have your bill. But SaaS pricing is a lot more complex than meets the eyes. Let's go and have a look at an example here. So SaaS companies do a really good job about how they keep their pricing simple on their website. 3 plans, $10, $20, $30. It looks really, really simple, but any growing high growth SaaS company is not just going to sign a 1-year contract and be done with it until renewal. They are going to constantly be upselling, constantly be cross-selling, and so forth. Let's take an example where a customer will start with $10 a month plan, let's say for 20 users. In month 1, they will also pay for an implementation fee. By month 4, they will realize they need to upgrade. Maybe they need to go to tier 2 and they want to upgrade all 20 users to $20 a month. Month 5, several of the users take an online certification as an example of a one-time fee. In month 7, the customer begins a hiring spree and adds 10 more users. You see where this is going, right? So as you can see, what appears to be a simple flat rate subscription fee really is dynamic variable pricing that will change every month. And you can only imagine the complexity that would go in to create the right invoicing month after month and so forth. So where is the complexity? Before you start a billing project, one needs to understand what is the complexity in the organization. For many companies, it is at the start of the contract due to diverse range of customer acquisition strategies. We talked about discounts, freemiums to paid trials, discounts and promotions, ramp-up pricing. We talked a little bit about that. There could be referrals coming from affiliates. Other struggles would be mid-period changes. We see this a lot among our customer base before they come to us on how much a simple mid-period, mid-year contract change causes friction, not only to calculate the prorated pricing for the remainder of the contract, but also the impact on the revenue. And finance teams really go splitting their hair trying to figure this all out. And less common, but not to be underestimated, are end of contract term challenges, renewals. There may be a renewal with automatic price change. Complexity often comes when you introduce a new pricing or packaging strategy, and you have to migrate existing customers to the new structure at renewal. So one has to think about all of this as you are thinking about billing automation, when you're picking a billing application to automate all of this and so forth. Let's go to the third piece of the puzzle, which is payment collection. It is an important piece of the puzzle, as you can imagine. It affects your cash. And again, much of the accounts receivable lifecycle can be automated with modern technologies like Ordway and Nrock over here. One area that can be automated is customer communication on payments. You can certainly send out invoices electronically, then follow up a few days later with a due date and payment reminder. If you have customers that pay with credit cards do fail. Keeping their payment credentials up to date is a constant challenge. Credit cards do have a short lifespan, they do expire. You can automate a simple email that could go out from their system, reminding the customer to update their credit card details. And if someone is not paying on time, frankly, most people just need a gentle reminder, and you can automate those gentle reminders to pay their bills on time, basically. And if you have a B2B model, you will likely have to support a diverse range of payment channels. You will have corporate cards, ACH, wire transfers, check processing, and all of these can add to manual inefficiencies. A good billing system would try and automate all of this for you as well. Last but not the least is the actual impact on accounting and reporting. Most billing systems out there keep billing and revenue separate. It is a good practice to look at billing and revenue recognition in the same context, and we'll talk about that a little bit. An example would be customer negotiating an implementation or similar fee spread out over 5 years, but it needs to be recognized on a delivery date. This is a very real example of how Ordway has helped some of our customers to automate revenue recognition as well. And the next piece is general ledger. You definitely want the financial entries that need to go to journal ledgers in a way generate automatically. You may have a good GL that will generate income statements, balance sheets, cash flow, etc. But journal entries related to invoices, payments, credits, outstanding receivables are a few examples of what a billing system can send to a GL. You will need to connect your billing system to your GL, whether it's QuickBooks or Xero, or perhaps for larger companies, it's NetSuite or Sage Intacct and so forth. And many companies, if you have a high volume of billing, you may not want to send all those details to your GL. You may want to just post summary journal entries that would have all individual credits and debits to avoid cluttering the GL as well. And the last element of this is business intelligence. As a SaaS company, I'm sure a lot of you live and die by KPIs and metrics, starting with high level as MRR or ARR, but also more granular expansions, contractions, etc., your net dollar retention, your gross dollar retention, etc., and so forth. You definitely want a good billing application that can also handle analytics for your SaaS metrics, your tax filings, your tax by jurisdiction, and things like that, and so forth, and combine it with the billing data for reconciliation as well, basically. So I'm going to, at this point, I'm going to pause.